iron ore is at $200. You put spot iron ore through any valuation model, and those iron ore miners could easily be twice today's price and still look reasonable. So there's this temptation just to keep on holding on and collecting those dividends, watching those shares prices climb. And that's the temptation we actually ought to fight, because iron ore famously is a cyclical business. These sort of prices are unprecedented in history, and the result of a few abnormalities on the demand side and on the supply side. And all of those unusual events are being corrected. I don't think, well, no one thinks really that $200 iron ore is going to last. One of the things it has done is mask difficulties in some of the operations of Rio Tinto. And that's why for us, we own and hold BHP and are happy to do so, but Rio Tinto is a sell. And if you look beyond iron ore, the rest of that business is looking a little weak, and dare I say it, even a little bit sickly. I think that copper business in particular, they're having issues in America, they're having issues in Escondida. Copper output from the Mongolian operation is not looking healthy. It's their second biggest business unit, and I fear they're making low returns in a buoyant environment, which is a terrible sign. And the aluminium business, I think, is just a dud, and there will be growing pressure to do something about that, despite tens of billions of dollars of write-offs. Iron ore has really saved Rio Tinto, and underneath the iron ore boom, this is not a healthy-looking business. BHP, for the first time, I think, in memory, is 10 feet ahead of where Rio Tinto is, and it's the clear standout in the sector. So Rio Tinto.